Conversation forward. Bala, Managing Director and CEO of Aditya Birla Sun Life AMC joins us, and then we've got Feroze Azeez. Gentlemen, good morning. Thank you for joining us. Bala, what is this stress test? How have AMCs conducted it? Because what we understand is that most of the AMCs, including yours, all of them are saying that look, there is no stress. Stress is only in real life. Portfolio में stress नहीं है.
I think, Nikan, the way one has to look at this is there's an exercise in is being carried out at a regular interval by individual AMCs to see where the portfolio, the construction is, how the portfolio is constructed, then how the portfolio risk is being monitored and managed, which will take into account the liquidity as well. I think the current discussion, which has been there for quite some times in consultation with AMFI committee as well as Sebi, is to more deep dive given the fact that this segment of the market has been getting more money in the last few years. And as the market cap increases and the ownership actually become more concentrated, would we run any risk on the liquidity not being sufficient enough to liquidate in case there is a 50% erosion in the value, if there is a 25% erosion in the value? No, this is always done, which I call it as a 1/100th of the event. How these things will look like. Therefore, it has to be looked at from that angle. Second is also one has to note this when the portfolio is being constructed by money managers, he allocates money to the large cap, mid cap, small cap, and then he keeps the cash. The stress test number that is being disclosed by the AMCs, assuming scenario that you don't liquidate the assets which are immediately getting sold, but you liquidate the assets in a proportionate basis on the basis of their ownership, then how long that will take? The number that I think you are reporting, or all of us are reporting, it is the assumption that we sell the stocks on a proportionate basis, including cash will be on a proportionate basis. Therefore, how long does it take actually to liquidate? That's more of a extreme stress scenario, which is basically from an investor's point of view, or maybe even from money manager's point of view, it's worth knowing about it. But having said that, this is something been doing it internally, or everybody has been doing it. Now it's come in the one single format and public platform. And second, of course, the additional parameters we also added to this, again, jointly in consultation with the members of the AMCs. We've added more related to the exposure to the investor concentrations, the stock level concentration, then how the portfolio is constructed between large, mid, and small cap and cash. And finally, is the risk metrics, which are reflecting the beta of the portfolio. And last, of course, you also given is about the turnover of the portfolio. It also, of course, give you a sense how the portfolios are being constructed. This is, again, more, I would say, proactive steps. It is the first time ever in the country is being done, but the public platform. But otherwise, we look at as part of the risk management practices, each of the mutual funds have been doing it in their own way, which is now coming in a single format at the AMFI level.
Sure, absolutely. Much the need of the hour, at least as per the regulator. But Feroze Azeez, hi, morning. Have the inflows for SMID schemes coming for March seen any pressure? Was there any panic that you sensed amongst investors? Because, this is one segment of the market which has seen phenomenal strength over the last 12 to 14 months. You think flows are going to remain strong, or there could be an aberration?
I personally think the flows can remain strong. That's from a future standpoint. If you look at March 13, 14 days, if my estimate is right, we've got on the day when small cap fell the most, I think about 300 odd crores came into small cap funds in total. Of course, that's an estimate. But I think flows are largely driven by past performance. That's the kind of behavior. If you test this hypothesis that how do investors behave in India, they don't just look at news and then decide whether their investment is going to go, right? So many people would not even know who's their fund manager, let alone who's the chairperson of Sebi and what he or she is saying. So I personally think past performance is what drives retail investment. Largely, of course, education from channels like have created a paradigm shift in behavior. But the kind of long-termish thought process which investors have, I don't see a large dent unless the sentiment is bad and continues to be bad. March has been reasonable. Flows positive is what my estimate is.
If all mutual funds are indicating that there is no stress, then why do you think, what prompted Sebi to come up with this kind of a, scrutiny?
If this question is for me, let me take that. So I personally think, if you look at the kind of rally we have seen in the small cap index has outperformed Nifty by about 25-27% this financial year, if I'm not wrong. That's point one. If a rally like this happens at an index level, there are constituents. There are about NSE 500. There are 34 constituents when I last checked, which have tripled in NSE 500. There are about 35 stocks which are greater than 100 PE. There are about 70 odd stocks greater than 70 PE, and so on and so forth. So there is going to be scrutiny for the fact that there are some stocks which are in extreme valuation levels as well. But in the same index, which is a 500 index, there's a stock with 10 PE as well. So I think to get down to brass tacks is what I think Sebi has intended this time around, rather than at index level, going into fund level and finding out liquidity. So point one, if you have such kind of rallies, I think it's regulators' concern that new investors should not get a shock with larger falls. And these kind of shake-ups are very, very critical, because during, say, shake-ups like this is when money or stock moves from impatient hands to patient hands. So a certain correction is always good. And of course, that was not the intent of Sebi, but I think the shake-up really moves stocks into solider hands from those little impatient ones.
Bala, why is everybody blaming the regulator for this fall in small and mid-cap stocks?
It's not the question of blaming Nikunj. I think as we had mentioned earlier, I think clearly, if you look at from a market cap point of view, today 50% of the market cap is a representation of large cap, and the mid and small cap contributing to overall market cap has gone up quite substantially. It is the job of all of us as industry player to bring the checks and balances, especially time where there is a significant outperformance comes in, and there is a significant finding of new companies in the small and mid cap space, which would also create a huge value for the investors. But it's more of checks and balances, given the fact that we are about $4 trillion, $4.5 trillion market cap, and mutual funds have become the large players. A large pool of retail investors also participating. So always take a break and checks and have a checks and balance, whether it is there in place or not, just to ensure that we don't get into any kind of unpleasant experience as we move forward. Therefore, the regulator job is to actually trigger that thought. And we all, as the industry participants, also been working closely with the industry body, as well as raising money from retail investors as part of their penetration that mutual industry is doing. All of us have been doing that continuously. It is always to take a back seat and see what all we need to do to ensure that we bring in the right level of disclosure, so that we don't suddenly realize that we didn't know about it. So as it is, fraud is something which I think how one sees it, and valuation is something on how one sees it. And the market liquidity is something historically I've seen it never puts you down as far as an equity market concerned. Every price there are buyers. At every price there are sellers. Liquidity gets generated on its own. If there is a fall in the market, the naturally volume goes up, the more participation comes. So therefore, this is something will remain as a part and parcel of the game. But in the extreme scenario, volatility sets in, and hard measures that we have taken, which could have probably helped to take a better informed decision. I think regulator pushing is coming all on the basis of that.
Feroze, were you waiting for the outcome of stress test results to make up a view on AMCs and some schemes, or this is something which is just routine and you will not pay too much of attention to it?
So I would, Nikunj, definitely pay some attention to it because every fund is of a different nature. If you look at every fund, one of the key criteria we look at internally is the kind of free float, weighted average free float of each fund. If the free float is low, then the price discovery is low. So every fund you can find out what's the average free float, weighted average free float of the portfolio. That's one thing we look at. Now in the small cap space, you have free floats ranging from 59% at a fund level to as little as 17% at a fund level. So if you're worried about liquidity, weighted average free float is one great barometer to check on the fund. That's one. Second, how much of the stock is in FNO? A portfolio like Quant Midcap has 71% of its weight in FNO. FNO stocks have great price discovery because there is a possibility of somebody wanting to take a bearish position without actually owning it. Short positions are possible. So price discovery in FNO stocks are so much better, is why they don't have circuit limits. So I would be more comforted. If liquidity is my concern, I would definitely like to check this reading of what's my fund's total exposure, weighted average exposure in FNO. Now coming to the fact of the entire stress test, I think it speaks of liquidation, it speaks of risk, and I'm so happy that in the public domain we are finally speaking of risks at a fund level. Standard deviation is something most investors don't understand. They don't understand what's beta, what kind of time it will take to liquidate. So I'm very happy that this kind of disclosure creates curiosity in the investors of trying to see both sides of the coin. It's not just about the return, it's about the risk as well. And risk cannot always be in English, high, medium, low. And I'm so happy that this is the first step where the regulator is forcing an investor and shaking him up to say, why don't you read what's the standard deviation? I'm so happy in the risk or the stress test, there is also 1 standard deviation, 2 standard deviations, 3 standard deviations mentioned. And I thought that was another 10 years away for an investor to look at these sigma ranges, and he's seeing it today. And I'm happy about that. But I think there's one little drawback of our stress test. We assume that every fund manager is operating in a mutually exclusive market. All the volume of a specific stock will not be absorbed by one fund manager. So if you look at the volume, all the fund managers coming together and they hold intersecting stocks. So I think great first step. I think a little more statistical betterment will happen over periods of time, but I'm very excited. The risk numbers are spoken far more deeper today than they were just till yesterday.
Bala, some mutual fund schemes have, or some AMCs have decided not to accept fresh, large lump sum inflow into small and mid cap schemes. Are you also considering the same?
I think the way we have been encouraging investors, the smaller mid cap, given the fact the risk related to the smaller mid cap compared to the other segment of the market is relatively higher. Therefore, one of the message we keep harping all the time is that one should consider investing through the SIP. Second, you must look at 3 to 5 year kind of time horizon. And there are periods that the segment would have given would give significantly higher return. At the same time, there's also segment will be subject to the risk related to what we are already discussing today. So therefore, as an industry, even as a mutual fund, encourage everyone to look at long-term investing as one of the concept. Though we are not putting restrictions in our smaller mid-cap fund, and given the fact that we are relatively compared to others, it's about 5 to 6 crores kind of size. And at the same time, our portfolio liquidity, if you look at it, the parameters are much better than some of the other schemes which are large in size. So keeping that in mind, while we not put any stop, but we continue to encourage investors to come only to the SIPs and the longer term of a 3 to 5 year kind of time. That's the communication that we are given.
All right, gentlemen, appreciate your time. Thank you so much for giving us your take on what exactly the stress test means for the mutual fund houses. All right, just let's quickly